So by the end of this video, you guys will learn how to properly prepare for the stock market crash. And I know a lot of you might be saying, well, Carter, the stock market already crashed, it's not gonna fall more. I completely understand where you guys are coming from, but we have to look at previous history. Now, history tends to repeat itself, and the average stock market recession lasts for about 14 months. Now, through all the ups and downs of all the bull and bear markets, that is the complete average. So right now, we're about 10 months into this recession, so looking at previous history, we still have several more months left of this recession. Not to mention a whole bunch of analysts like Chase, Bank of America are stating that the stock market is due for another 20% sell-off. Now, going on YouTube or Google, you guys will search up how to prepare for the stock market crash, and you guys will see so many different answers, and we're gonna just break down the easiest way to get through a recession. Now, before we jump into that, we have to understand what a recession and crash is. Well, stock market recession and crash is pretty much when the stock market has a rapid sell-off. A lot of analysts, and including myself, state a crash is pretty much when the stock market sells off 20% or more in a given year period. And you'll notice the most recent crash we've seen is in 2020 during all of the lockdowns, and then the other ones is like 2008, the dot-com bubble, and all these other ones right here. Now, this year we've seen so much sell-off and so much volatility in the stock market for a variety of reasons. And these are the most popular reasons why. We've seen high interest rates, we've seen high inflation, we've seen conflict overseas, we've seen unemployment around 4%. These are all indications of a slowing economy. Right now, the Federal Reserve is trying to cool down inflation, so they've been increasing interest rates to calm down spending. And anytime you have higher interest rates, you're gonna have people not want to buy things. Why would you want to buy a house or a car when a year or 2 years ago, the interest rate was 2-3%? Now you're looking at 10, 12, 14%, which is absolutely crazy. And just to put this in perspective, if you guys bought a $400,000 house, 2 years ago, your monthly payment would be $1,400. Right now, it's over $2,000 a month. $800 difference, which is absolutely insane for the exact same house. All right, so now that we understand what a recession and crash is, what should you do? So the first thing I always do is look at sectors. Sectors are very, very important, and this is just little snippets of the stock market. So you'll have a technology sector, you'll have an energy sector, you'll have healthcare, and a variety of other ones. And looking at previous history, there's always been a couple sectors that actually perform well in a stock market crash. Looking at this year's, we've seen a huge increase from energy. Energy is actually profitable this year compared to, the general stock market, which is down 20%. And I know you might be saying, well, Carter, that's the only sector up. Hey, but if you were mindful of it and you had the opportunity to invest in it, you'd be up on your money. Comparing if you just invested in the stock market, you're down. And if you want to even go back to 2020, technology was up year to date. Generalizing, the general stock market was down. So there's always been a couple of sectors that performed well. And if you don't want to do that, I completely understand where you're coming from. What I would recommend doing is looking more towards the value stocks. So value stocks are companies that have a little more slower growth, but that do well in bull markets and bear markets. Companies like this are Johnson & Johnson, Coca-Cola, Waste Management, all companies that you and I use every single day, whether it's a recession or a bull market with the economy thriving. And if we look at Coca-Cola, Coca-Cola is up about 6% this year. Waste Management's up about 1%. Johnson & Johnson has had another great year, as you guys can see. So I know a lot of you might be saying, well, Carter, what is the best way to prepare for the stock market crash? What is the best way to prepare to make money? I think it's this. I think the best way to prepare is to just continue the process of investing. And I know a lot of you might be saying, well, Carter, why would I invest if the stock market's getting absolutely obliterated? Well, hey, if we look at previous history tells us a whole bunch. Looking at it, you'll notice the average crash is about 20% sell-off, okay? That next year, 1 year after a stock market recession, historically, looking at data, you're up about 21%. That following year, look at these charts. You guys will see 1 year after, you're up about 21%. On average, we've seen some as high as 36%, 40%. So as long as you continue to invest, you can buy in at these lows and become profitable and make money when the stock market rallies. So a couple of these ETFs and indexes that I would recommend investing in are VU and SPY. These pretty much just track the top 500 companies in the United States. You'll get great growth, you'll get dividends, and you don't have to actively worry about them. And not to mention, the average hedge fund can't even beat the S&P 500. So historically and generalizing, you're outperforming hedge funds by investing into these ETFs. So investing in the stock market may seem scary or overwhelming, but as long as you have a long-term mindset, you guys will make some money. And I always think right now you see so many people saying the best way to make money is to day trade, swing trade. Yeah, you can make money from them, but 90% of people can't even succeed with day trading and swing trading. So you just have to just invest for the long term, and that is the best way to build wealth during a stock market recession. So I hope you guys enjoyed it. If you guys have any questions, let me know down in the comments. If you want to learn more about investing, make sure you guys subscribe right now. Subscribe, because we're nearing 22,000 subscribers. So guys, I hope you guys enjoyed it. We'll see you guys later. Remember to stay happy, stay positive, and I hope you guys have a great rest of your day. Have a good week, and we'll see you guys tomorrow in another episode. Take care.